June 1, 2026, Saylor blinked, Bitcoin bled, and Hyperliquid printed a new all-time high. Let's go. Quick shout out to today's sponsor Compete Token, the gaming crypto that actually has real games behind it. Link in the description. Michael Saylor just sold Bitcoin for the first time in 4 years. Strategy dumped 32 Bitcoin for about $2.5 million at an average price of $77,000 a coin, and the filing says it was to fund preferred stock dividends. The man who built a $60 billion Bitcoin treasury and said he'd never sell, and look, technically he barely sold. This is a rounding error, but the symbolism is loud. Saylor broke silence, calling the sale immaterial, which, fair, $2.5 million out of $60 billion is basically a tip jar. But the market didn't care about the math, it cared about the precedent. MSTR shares tanked over 6% at the open because traders just learned that yes, in fact, Strategy will sell Bitcoin to make payroll on the dividends. Bitcoin crashed under $72,000 to a 2-month low, and the ETFs are officially red on the year. The spot Bitcoin ETFs are now on a 10-day $3 billion outflow streak, which finally flipped 2026 inflows negative year to date. About $155 million in long positions got liquidated in 24 hours. Look, Bitcoin is still up huge from the cycle lows. This is a healthy shakeout, not a funeral. But the ETF crowd is the reason we're down here. The same tradfi suits who pumped the price up to 126 are now hitting the eject button at 72, and somehow they're going to call it Bitcoin's fault when it rips back. Set your watch. Strategy's surprise sale just blew up a $50 million polymarket bet. The market asked whether Strategy would sell Bitcoin by May 31st. Strategy did sell between May 26th and May 31st, but didn't announce it until June 1st. Cue chaos. The market is sitting at 99.9% no. The yes shareholders are losing their minds in the comments, and the whole thing is now going to a UMA token holder vote. This is honestly peak crypto, a $50 million bet on a real-world event settled by a decentralized oracle, disputed by anonymous traders citing the exact rule text. Try doing that on the New York Stock Exchange. The CFTC just approved the first Bitcoin perpetual on a US-regulated exchange, and Hyperliquid promptly rocketed 17% to a new all-time high. Kalshi's BTC-PRP got the green light Friday, cash settled 24/7, funding rate anchored to spot. The CFTC also let a Coinbase affiliate route US customers into offshore perps through Deribit. This is the biggest regulatory unlock since the spot ETF approval, and the market knew it instantly. Then on Monday, Kalshi filed to self-certify perps on 12 more altcoins: Ethereum, Ripple, Solana, Dogecoin, Stellar, Chainlink, Litecoin, Sui, and more. After years of US traders being forced to use offshore exchanges or VPNs, the CFTC finally caught up. About time. Binance just put 7,000 US stocks on a crypto exchange. Non-US users can now trade US equities and ETFs with zero commission, fractional buys starting at $5. Settled with USDC, Tether, BNB, and other digital assets. Apple, Nvidia, Tesla, all of it on Binance. And then comes the real play. Binance is rolling out B stocks, letting users mint tokenized synthetic versions of those shares on the BNB chain. That's the whole tokenized real-world asset thesis, going live at scale. The legacy brokers spent 20 years protecting fractional shares like it was the crown jewels, and Binance just shipped it on a Monday with crypto rails attached. While Saylor was selling Bitcoin, Tom Lee was stacking Ethereum. Bitmine bought another 26,400 Ether for $52 million, bringing its total bag to 5.4 million Ethereum. That's about 4.5% of the entire circulating supply, worth over $10.5 billion. Tom Lee called it early crypto spring and said ETH prices aren't reflecting the strengthening fundamentals. Ethereum dipped under $2,000 on Monday, which is the kind of price where the smart money does what Bitmine is doing and the loud money panic sells. Pick a side. Japan's ruling party just officially backed crypto ETF trading and yen-based stablecoins. The Liberal Democratic Party endorsed both, which clears the runway for spot crypto products in the world's third-largest economy and gives the green light for an on-chain yen. This is huge. Japan has been a top 3 crypto market for a decade despite running on tax rules from the Stone Age, and now the ruling party is publicly pro-ETF. A yen stablecoin from the actual Japanese government side is the kind of legitimacy that turns crypto from a thing finance ministers warn about into a thing finance ministers brag about. Vitalik Buterin wants to fix the way DeFi blows itself up during crashes. He published a rethink of liquidation mechanics, basically arguing the cascading liquidation model has been doing more damage than any actual market move, and he wants smoother oracle pricing, slower liquidation curves, and circuit breaker style design. Every DeFi cycle has the same pattern. Price dips a little, liquidations trigger, more selling, more liquidations, full death spiral. Then everyone tweets about how Aave is robust. Vitalik just calling it out and proposing actual fixes is what protocol leadership is supposed to look like. Meanwhile, most chains can't even agree on what time it is. Sui finally explained why the network crashed 3 times in 48 hours last week. Engineers blamed 2 of the outages on a gas charging conflict in release 1.72 and the third on an unrelated validator bug during an epoch change. Total downtime, over 15 hours. This is the third major reliability failure since Sui mainnet launched in 2023, and the token is down 18% on the week, sitting at 86 cents. The whole high throughput chain pitch only works when the chain is, throughputing. When your validators fall over because the gas math fights the new feature, that's not a hot blockchain, that's a beta test with a market cap. A white hat developer just unfroze $2 million in Ethereum that had been stuck on chain since 2016. The dev, who goes by 0x Flarent, found a way to fix Hongcoin's broken refund contract from the original ICO mania days, and the team ran 41 unlock transactions covering 48 blocked investors. 10 years later, the refund finally arrived. That's the magic of smart contracts. They never die, and sometimes a random dev in 2026 can resurrect them. Try getting your money back from a 2016 startup that ghosted you. Spoiler, you can't. But the Ethereum contract just paid out a decade late, which is the most on-brand crypto headline of the year. One more shout out to Compete Token, the gaming crypto with real games, link in the description. That's the news. Like, subscribe, see you tomorrow.